You are like a tax-free bond. The longer I hold on to you, the more you're worth. Tax-free bonds. Does this topic raise an eyebrow? Yes, you heard it right. There is a certain class of bonds that come under tax-free bonds. But before that, hey, I am Ruchita and I welcome you all to our knowledge series by SMES Discover, where you can get smart about investing. Tax-free bonds are a low-risk investment and typically carry a maturity of 10 years or more. And the most appealing part of these tax-free bonds is that the investor gets 100% tax exemption on their interest income. This enables the investors to save more money. Apart from the tax benefit on the interest earned, the tax-free bonds are investments that have several attractive features. Let us see what the benefits are. First, regular tax-free income. The investors get a tax exemption on the interest earned. This makes them an attractive investment option to investors. Second, fixed interest rate. Tax-free bonds are usually issued with a fixed interest rate, which means that investors can expect a fixed return on their investment. This makes them a relatively low-risk investment. Third, long-term investment. Tax-free bonds typically have a long maturity period, which ranges from 10 years to 20 years. This makes them a suitable investment for individuals looking for long-term investments. Fourth, high credit rating. Since the tax-free bonds are usually issued by government agencies or public sector companies, this makes the tax-free bonds a safe investment with a low risk of default. Fifth, ease of trading. The tax-free bonds are listed on stock exchanges, which means that they can be traded like any other security. Now, this gives investors the flexibility to sell their bonds in secondary market if they need to liquidate their investments. 6. Issuance. The tax-free bonds are issued in limited quantities, and the window for subscription is usually open for a short period of time. This creates a sense of urgency among investors, which can lead to a higher demand for such bonds. Seventh, lower coupon. The interest on tax-free bonds is slightly lower in comparison to other bonds. However, the effective returns are usually higher since the interest income earned is exempted from tax. Typically, high net worth individuals, HUF entities, trusts, cooperative banks, and qualified institutional investors prefer to invest in tax-free bonds. Apart from the names mentioned above, the tax-free bonds are an excellent choice for senior citizens. Do you want to know how you can further save on taxes? There is another type of bond called 54EC or capital gain bonds. These bonds offer a tax exemption on the capital gains under the section 54EC of income tax. The investors can claim a deduction for the amount invested in these bonds up to a maximum of rupees 50 lakhs in order to reduce their taxable income in one financial year. However, there is a small twist. The investment in 54EC bonds is subject to a lock-in period for 5 years, during which the investors cannot transfer or redeem the bonds. Capital gain bonds carry a fixed rate of interest and are non-transferable and also cannot be used as a collateral for loans. Some bonds that are eligible for exemption under Section 54EC of income tax are Rural Electrification Corporation Limited bonds, National Highway Authority Limited bonds, Power Finance Corporation Limited bonds, Indian Railway Finance Corporation Limited bonds. Just like other bonds, 54EC bonds do have a certain characteristics. Under 54EC bonds, a maximum of rupees 50 lakhs can be exempted in a single financial year. In order to avail the tax exemption, the investment must be made within 6 months of sale of immovable property. In case these bonds are sold before maturity, then the amount invested on which tax exemption was claimed will be taxable as long-term capital gain within the 12 months of the sale. These bonds are issued by the infrastructure companies that are backed by the government. Hence, the risk factor gets mitigated. If you're selling your property and are looking for ways to avoid paying taxes, 54EC bonds are at your rescue. This is all in today's video. We hope that this video showed you a way how to save taxes on your bond investments and you are better equipped to invest smartly. We hope you are excited to start your investment journey into bonds. Visit smes.in and take your next step towards investing wisely. But before signing off, always remember, investment in debt securities are always subjected to market risks. Please read all the offer related documents carefully before invest. For any queries in this module, please leave a comment below. See you in the next video.